Welcome back to Everything Money. In this video, you will learn how Tesla's market cap has now exceeded the next 14 car companies combined. We will show you the numbers and how absurd this is. If this resonates with you about a contrarian view on this amazing stock, we will show you the financials, go through a fundamental analysis of Tesla, and show you how overpriced we think it is. We will move toward our stock analyzer tool to show you what you should or should not be paying for Tesla moving forward. And if you're interested in trading Tesla, we will go over to Mo and he will show you all the trends and all the charts on how to make money on these swings. But first, why should you listen to us? I bring your questions about an amazing company to two guys who manage over $100 million in real estate, multiple businesses, and stocks, and they will give you their thoughts on possibly investing in Tesla for the future. Paul, what do you think?
All right, guys. So thanks, Seth. First off, follow us on Instagram. We have a new Everything Money investing account there. And then follow us three personally because our moms are very proud of us.
Using the term bubble, Paul, is scary. I mean,
you know, in the movie The Big Short, Michael Burry is talking to the guy who invested in him. He said, "Hey, we're in a bubble." And the guy goes, "You don't know you're in a bubble until you afterwards." And Michael Burry's like, "Well, no, there are indicators ahead of time that we're in a bubble, right?" And I look at this Tesla. And yesterday, a friend of mine, 2 days ago, sent me a graphic, and I shared it with our chat.
Yeah.
And Seth has it here. So why don't we pull it up right here?
Yeah, here you go.
So this is written here. How can this possibly not be a bubble? Tesla's market cap is bigger than the market cap of 14 other major global auto companies combined. Guys, I don't know how to say this. And you might sit there and say that's because of their potential. So what happens? If the company grows 10 times, is that going to be 10 times more market cap? That's the point, guys. Tesla's selling for 22, 23 times sales when the average car company is selling for less than 1 time sales.
Paul, I'll hit you with this. Do you know how many cars Tesla's going to make this year?
800,000.
I think it's closer to 1 million.
Yeah. Okay, so call it 1 million.
Yeah, how many cars do all these other companies make, Paul?
Combined?
Yeah.
50 million?
45 million.
So it's 23. It's all of them combined, and they're 2% of the size. 2% of the size of all those other ones combined in terms of sales, and these guys, and it's 23 times the value.
But they're tech.
Yeah, guys, this is one of the things we talk about in this channel so much. Go ahead, Seth. You're going to say something.
No, please do, because I guess I was trying to explain this. When I break this down to very normal people in this world, I literally put my hands high and low. It's like Tesla's here, they make this many cars, and all of these companies make this many cars, but their valuation is reversed. It's like, this is not...
So the analogy I always bring up is, guys, does Tesla have a lot more potential than the other car companies? Absolutely.
Yeah,
they absolutely do. But let me ask you a question. Everybody here understands sports. Do you go pay some high school star $30 million a year? The answer would be like, of course not. Well, why not? Well, they haven't become a star yet. Bam. That's Tesla. Tesla is a star, but their results aren't showing it yet. They haven't built 10 million cars a year yet. They haven't built 5 million. They haven't built 1 million cars a year yet.
1 million cars a year.
We have two guys. All three of us have Teslas on order. Seth just got his. It was delayed. Mo's been delayed 8,000 times. We actually think it's a joke, like he's not going to get this car. Mm-hmm. I've already moved on basically from it, saying I'm not going to wait over and over for this thing. Let's let the companies actually go justify the $1 trillion valuation before you actually become a $1 trillion company.
But then you just miss out, Paul.
But what's happening is people don't factor in the business side of the stock. Mm-hmm. They just look at it as a ticker price going up and down. And Paul, it was $150 last year. Now it's $950.
That's yeah.
But it got to $1,280 just the other day, or $1,250, and now it's down to $950. What's this fluctuation? You're telling me that's normal? So we look at Tesla.
Yeah, show them the financials.
So let's look up Tesla. We're looking at our Everything Money software, exclusive software. We clicked on the 8 pillars tool. Okay. So, oh wow, just look at the 1 month. Look at the 1 month chart. Sick. 1230, and now it's at 1,035. Okay. So it's a $1 trillion company. It did $46 billion in revenue. Guys, remember this. $1 trillion company, $46 billion in revenue. Now, somebody out there is going to tell me, oh, you can't compare it to Toyota. Okay, well, I can. Guess why? It's a car company. Because 85-90% of its revenue comes from cars. It's a car company. Market cap of Toyota, $255 billion. 1/4, and their revenue, $275 billion. 6 times more. 6 times more revenue, 1/4 the market cap.
Starting to make sense, Paul.
Well, let's look at it this way. Profit margin. Their gross margin here on Toyota is 20%. Obviously, Tesla's going to be like 50%, right? To justify it.
Has to be.
23.1.
Oh, wow.
So it's higher, but it's not much higher.
What we're walking you through, folks, if you're new to investing, is you have money to invest. You have places you can put it. There are really smart places, disciplined places, and there are overpriced places. And if this is starting to resonate to you, stay tuned, and we'll show you how to trade this later. But keep going, Paul.
Go ahead, Mo. What were you going to say?
To justify that valuation, that gross margin should be like 80%.
I mean, it has to be huge.
90%.
Yeah, it's got to be just like
10%. I don't know.
Yeah, in the car business is one of the hardest businesses in the world to make money in. That's been proven time and time again. And if you don't think first, and some of you might sit there and say, oh yeah, well the unions at the car, I agree. But you're telling me at some point if Tesla becomes the biggest auto manufacturer in the world, it's not going to have those issues? Guys, remember, go back to 2000. Cisco, Intel, Micron, these were the darlings of the world. They are still selling for prices lower than they were back in 2000. And their revenue and profit are 2, 3, 4 times higher. So if I told you in 2000 that Intel at 75, 80 bucks a share would triple its revenue and profit over the next 20 years, but its stock would be lower, what would you tell me?
No chance.
You'd be telling me the exact same thing you're telling me about Tesla right now. Mm-hmm. You're absolutely wrong. No, and this isn't something that's obscure and it happened only on these 3 companies. If you'd invested in every internet, we went and looked at the numbers, invested in all these internet companies back in 2000, you'd have made 3% a year on your money over the next 20 years. 3%, not 30, 3%. When the market's done 7% a year. It's like 6.6% a year. But guess what? That 3% a year, 80% of it was because of Microsoft, Apple, and Amazon. 3 companies made up 80% of that 3% gain. And guess what? Amazon was at 113 and went down to 6 before it went back all the way up to 3,500. So you'd have to stomach it all the way down and say, no, I'm cool. Guys, you're not cool, because you know why? You're basing your investment decisions on where the stock price is going, not where the fundamentals are going. These fundamentals don't make sense at all.
In terms of like moving forward, Mo, is like I've watched videos by like this Chicken Genius guy that he says that people buying the software will bring in more revenue than cars moving forward. Like the software is going to be the biggest and best thing ever made.
What's that based off
Are
of?
they selling the software outside of the car?
Yes,
what's it based?
The software will be bought by other car companies to be
great. What's that? I mean, is that something that Tesla is actively doing and they've shown the numbers? Like the problem we have is, guys,
you're right. They're just not.
It's easy for you to say, hey, you know what? Tesla could very well make planes autonomous. I can just say that. Does that mean it's going to happen?
I mean, look what they're doing.
I'm sure they
solar
are.
Power roofs.
I'm sure. By the way, solar power roofs was the next biggest thing.
Where are they at?
How
they're
they done with that
website,
one?
But nobody
it's been
has them on
tough
their
for
house.
them.
It's been
It's
tough.
been very, very tough. And by the way, the other thing is he bought that company from his cousin.
Yeah.
And he got sued over that by his investors. I want to look at the investors and go, wait a second. So you love Elon's brilliance, and by the way, I love Elon.
I love Elon.
You love his brilliance over here, but then like I don't question Warren Buffett. I don't sit there and go, Buffett, I love this decision. I'm gonna sue you. I sit there and go, listen, it's Buffett. If he agrees with this, he agrees with it. If he doesn't, he doesn't. Okay, fine.
Show folks the 8 pillars of this company.
Guys, here's the 8 pillars. So, PE, not applicable. Price of free cash flow. Why? Because they haven't made money in the last 5 years and they haven't made free cash flow in the last 5 years total. Okay. Shares outstanding. Guys, look at this. They've diluted their owners by 29%. The dilution is one of the biggest problems in companies. When companies are expensive like this, Elon Musk is a crack dealer sitting in the corner, and you guys are all the people who are addicted to crack. He's just feeding you what you want, and you're going and buying it. But what he's doing is every single time he sells more, he's diluting you as an owner. If a company has 100 shares outstanding, you own 10, you own 10% of the business. If they increase the number of shares to 120, you still own 10 shares, but now of 120, you own 8.33% of the business. You have been diluted. You get a smaller piece of the pie now. You get a smaller piece of the revenue, smaller piece of the profit. This is what they're doing here. 5-year long-term liabilities. They don't even have free cash flow over the last 5 years, guys. It's just, now granted, revenue growth, of course.
Yes.
Net income growth, of course. It's huge. Cash flow growth, of course. Why? Because they went from losing cash flow and losing money to making cash flow and making money. But still, it's all about, every good investor of all time will say, it's not about what you're buying, it's how much you're paying. That's it. If you don't understand that, I don't know what to tell you. We're not the channel for you. And I'm okay with that. Now, to show you how ridiculous it really is, let's go to the stock analyzer tool. This is the tool we made specifically because I said, everybody, fine, put your assumptions in. Figure all your assumptions in for revenue, profit, everything. Let's go forward and let's see what this company should be worth. So, stock analyzer tool. Let's go to 10-year analysis. You can go between 1 and 20. Let's do 3 assumptions. Now, revenue growth. Let's say they become the biggest car manufacturer in the world in 10 years.
Selling like 40, 50 million cars a year or more.
Well,
Who's the biggest car company in the world right now?
is it Toyota?
Is it Toyota or Ford?
Toyota sells 10 million.
I just want to pull it up.
Who sells the most cars in the world? Toyota Corporation, around 10 million units, it says.
All right, thank you.
That's in 2018.
That's fine. I'm sure Toyota's close to the top. If not.
Let's call it 10 million cars. Let's say they crush it. 20 million cars. What's the average price of each car?
People, again, Paul, the people who really love Tesla say, well, they're going to come out with a $25,000 car here in the next 4 years. And so
That's only going to hurt their average car price. In September, the average new car was $45,000.
Yes, that came out. That was a controversial story.
Let's assume that.
Yeah.
So
it's true.
20 million cars. And let's assume that if they come out with a cheaper car, it's going to drive that average down. But overall, even in 10 years, it's still $50,000 a car. What's that revenue?
Oh, Lord help us.
Isn't that a trillion?
Yeah, a trillion.
Is that $1 trillion bucks? Mm-hmm. Okay, so $1 trillion. So to go from 46
billion
to $1 trillion in 10 years, that's $1 trillion, right? Million, but yep. Is that correct? Did I do that right? 36% growth a year. Yeah, that sounds about right. 36% growth a year. Okay. So let's do 36% growth. Let's do the low end of 20, 28, and 36% revenue growth a year.
Okay.
I'm just going nuts, guys. I'm just going to go crazy. I'm going to say, by the way, I made Tesla the #1 car manufacturer in the world by double. Not just equaling, by double. Toyota does 10 million. I said they're going to do 20 million cars. So off the dribble, I'm going insane.
Okay, this is good.
So
this is a good start.
Now,
why don't we compare? Why don't every time you make that assumption, I'll show Toyota's just so you can get a back and forth of it.
Okay.
So right now, the 1 year is 21%, 5 years 2.2%, 10 years 4.3%.
But Mo, it's not Toyota. You're stupid for comparing it to Toyota.
Okay.
5% over the last 5 years?
Profit margin.
2% over the last 5 years.
2%.
Let's go profit margin, and let's assume
Go on.
that they're going to be equal to or a little bit better than Toyota. That's even beating the U.S. manufacturers. It's going to be a little. Toyota did 10% in the last year, which is a big number. Let's go 7, 9, 11.
Okay.
Free cash flow margin. I'm going to assume the exact same thing. PE. Now, here's where we all get in arguments.
Oh, yeah.
There's an idiot in California who ran for governor. And he thinks that Tesla will be a 70 PE company in 10 years. Why? Because they're a 300 PE company now, so 70 is quite the discount.
Yeah.
Well, he's stupid AF. But let's assume 30, 50, and 70. We'll call this the Meet Kevin as a Moron multiple. Okay? We're going to call that the Meet Kevin as a Moron multiple.
MKMM.
30, 50, 70. 12.5% for everything. Now, guys, this is probably going to show Tesla's a screaming deal right now. I'm assuming that's going to happen. But I want you to remember, the numbers that have to happen for that to happen is the ridiculous part. Analyze button. Oh, my God.
Wow.
Let me see. Oh, wow. It's still.
So, guys,
Still.
it needs to grow at 36% a year, have 11% margin, and sell for 70 times profit to even justify today's price. It's worse than I thought it was.
Yeah, that's bad.
If you don't get this, you need to do me a favor.
Uh-oh.
I want you to go.
Oh, no, Paul.
I want you to go to your garage.
Not the garage.
I want you to, I have to the garage. I want you to open your car door.
The Tesla car.
I want your Tesla car. I want you to put your head squarely between the door and the frame. I want your beautiful wife, who I'm probably going to be dating soon, to come and just start repeatedly slamming the car door into your head, between the door frame and your head. Because if you don't get this, you are diabolically stupid. Now, could this end up happening? Absolutely.
Yeah.
It could absolutely end up happening. But if it does happen, it's not for, if you have 100 of these situations that occur, you are going to lose so much money that social Darwinism needs to take its place and you need to be eliminated from this earth.
Well, these situations are occurring. I mean, I talked to somebody last night. They're in a pie chart, wealth investment plan, and it has a little Tesla. And then I look, and it's got Shopify. It's got
why do they
Uber.
have those?
It
Why?
sounds like a process.
Well, they have those because those guys running those funds have to explain to their investors why they're not in the stocks that all their neighbors are killing it in. So they go, hey, I have your stock in here. If you guys ever think that mutual fund managers and money managers don't have career risk and they don't have to do the things that your moron friends do, of course they have to do that. They have to do it in order to save face. So then when they don't do as well in their returns, they can justify saying, but I have the stocks you wanted me to have. And when the market falls, they'll be like, hey, everybody else fell. I fell just along with them. But that's the process, guys. And right now, I see so many, so when my caddy at a country club who's 18 years old and just went through puberty 3 weeks ago is telling me I'm wrong on Bitcoin, Palantir, and Tesla, that's how I know I'm right. Now, the recent stock prices show me I'm wrong. I'm fine with that. But you find 100 of these things, you're going to do very poorly over a long period of time. Very poorly.
It's amazing how many things in this world, Mo, have gained value over the past few years. Random, crazy cosplay conventions and comic books, but everyone will put their hard-earned money into Tesla.
Yep.
And it's just like a no-brainer. It's in all the...
It's quite shocking,
astonishing.
Isn't it? So, go ahead.
So if you want to get the software behind Paul, if this resonates with you, and we're driving this idea home, or you don't think we're stupid and it's starting to make sense, Paul will tell you right now how to get the software.
So we created the software because our original subscribers wanted to be able to do their own research and analysis without waiting for us to make more videos. So we created the software just for them. What's included is everything you saw here, including our amazing stock analyzer tool. You get 30 years of financial data, access to Seth, Mo, and I. You get exclusive daily content, 2 or 3 videos per day sent to you only through our software and our mobile app. This software back here is on the App Store and Android, so you can use it on the go. Everything there is included. All the extras, retirement calculator, real estate calculator, everything here is all going to be included in your subscription. But most importantly, if you feel alone out there, which a lot of our subscribers do, they joined our community with over 6,000 people, and now they can talk to everyone around the world 24 hours a day about their own investment ideas to bounce things off each other, talk about things. You're no longer alone in your own island. You can have these conversations with everybody. This is all available for only 90 cents per day. This is a no-brainer, 90 cents per day. If you're just able to either increase your returns by 1% or decrease your losses by 1%, this could lead to hundreds of thousands, if not millions of dollars a year. And you can also fire your financial planner, saving hundreds of thousands of dollars in your lifetime. So sign up, everythingmoney.com or Patreon. Either one gets you access within minutes. The benefit of everythingmoney.com is we do not charge sales tax yet because of our size. So sign up, 90 cents a day, less than a cup of coffee, no brainer. Make the best decision if you are serious about your financial future.
And if you're looking to trade Tesla, Mo told you there was a flagpole pattern last week, and it's going to come back down. Mo, show them how you did this.
So guys, I tell you so many times that W formations are so important, and creating these W formations to create these new support levels needs to happen. That run-up that we had last week was absurd, or 2 weeks ago, whatever it was, from this Hertz thing. I mean, Elon Musk even said it. He said, I don't understand why the valuation's changing. Tesla doesn't have a demand problem. It has a supply problem, and we can't supply the cars. So stock price flew up there, and then it kind of created a W, but I said it was going to fall back down to this 920 number, and here it comes, and it has fallen down to, ironically, that little blip that it created, and I think it's going to go lower. So this is just, it's just pattern recognition, guys. If you want to learn this, just come and learn from me in the Bid and Ask Nation. So there is a way to trade this, though. There is a way to make money. You can come over here and swing trade this. We had multiple people in the Bid and Ask Nation that caught this swing trade coming down through the sweet spot, great selling volume, and made a killing. I mean, this was $1,250 down to $1,050. And it was a very, very safe trade that you could have learned how to do. Now, also, you can make money on a 15-minute chart. Look at this morning. This is a perfect day trade right now. You're over 80%. You're getting great volume. Look at these engulfing candlesticks. You could have invested somewhere in the range of 1,025.
Wow, what's this morning's news?
You're still in it. 1,000.
Elon ate a hot dog. And
Michael Burry deleted his Twitter, so that reflects positively on Tesla.
Like he got in a battle. Didn't he get in a battle? He got in a battle with Elon Musk, so he deleted Twitter, and then everybody said,
so it's only logical that their
Burry
valuation
lost.
should increase this morning.
A rap battle, I assume?
Yeah. So
Keep going, Mo.
So, guys, I just showed you 3 different ways that you can gauge where this stock is going to go and how you can make money on this stock. So if you want to learn how to do any of these types of pattern recognition, come and join me in the Bid and Ask Nation. You get all of my Trading 101 series videos that will explain all of this to you. You get my seminars that I do monthly that you will get. You get access to the Employed Trader series, which is 6 stocks that I tell you about every single day, and you can invest in those if you are a busy person.
You get
access to the Discord community, which is 900 people that are all on the same wavelength as you and all want to make money in this way and do make money in this way. So come and join me in the Bid and Ask Nation.
Folks, we love Tesla cars. I'm in love with Tesla stock at $150, but currently still not at $150.
I'm not.
I bet mine's like 50 to 45 maybe.
Wow.
That's my guess.
And I
well, you can use the stock analyzer tool to figure it out.
I certainly don't think it's out of the realm of possibility. You guys are going to call us nuts, but
and that's just it, Paul. I think I was speaking to some normal folks last night, and they just say, you know what, this regardless of all the rules and everything you've said, Tesla's just going to keep going up.
Of course.
Yeah.
Needs to be said.
Yeah, so when it all comes crashing down, we'll see you all on our channel again. And one day it'll happen, Paul. We'll get there.
Maybe.
Final thumbs up. Keep watching more videos. If this speaks to you, we'll see you in the next one. Thanks.